So what's going on in the UK housing market? If you're a property investor looking to get into property, or even a homeowner, you're probably sitting quite anxious thinking, what is going to go on in the market? Are we going to get a crash? Are we going to get a boom? Is it going to stay flat? What's going to happen? So this is the July property market update, and in this you're in the right place if you want to understand this, because we're going to be covering in this video house prices, we're going to be covering affordability, we're going to be covering the base rate rise in the Bank of England removing the stress test. We're also going to be covering Boris Johnson's attempt to help first-time buyers and stabilise the property market. We're going to be giving you my predictions on the market, what's going to be happening, and make sure you stay to the end, because I'm also going to be telling you what you should be doing as property investors in this current climate, which is very, very uncertain and very, very confusing. Because if you're confused, I don't blame you, because I'm most certainly confused with some of the headlines that's out there. But let's dive into them. But before we do, make sure you hit that subscribe button, make sure you hit that bell icon so you get notified every time we do this, and that like button really helps the algorithms out. And let's get going and get into this. I know time's super valuable for some of you, so what we'll be doing along the bottom is we'll be putting in timestamps so you can fast forward to whatever part of this update you want to get to. Also, we're going to be giving you the links of the articles in the descriptions, and there's going to be some suggested videos that will also be in the descriptions or up the top. If you don't want to interrupt watching what you're doing, you can look in the description and get them links there, or you can link straight to them if you're eager to watch these suggested videos that I'll be suggesting. So UK property prices, what is happening with the UK property prices? So Rightmove is the biggest UK platform in the UK. Kind of a lot of UK's there, but it's the biggest platform in the UK. They hold the most data, obviously, because they're the biggest platform, and they bring out an index each month. It's the most accurate one, but it's based more on predicted sales and selling prices than it is on accurate prices. But let's have a look what Rightmove have put it into their monthly update. So the main headline from Rightmove is the 5th time we've had an upward price, another record, but there is signs of this slowing down. Prices for the 5th consecutive month hit a record of 368,000. That is asking price, not sold price, but a much more moderate growth than usual at 0.3%. And they're stating affordability constraints, a better balance between supply and demand, and the usual seasonal price drops will contribute towards further slowdowns in the market. But every market will have a macro and micro circumstances going on there. Every city's got macro and micro economics going on within them. You've got parts that will be growing higher and parts not so much, which gives you out the average. So the averages are just that, averages. So looking at the overall as a whole UK is one thing, but you want to look at it by region. And when you look on Rightmove's data here by region, they show you the areas that have been performing really well. So if we have a look at this on here, you can see the northeast for the first time for a little while has actually had a bit of a decline. For me, that's great news, because the stronger the capital appreciation, the less motivated sellers you've got, the less property deals and BRR deals you can do. So that's actually good news for me, although the portfolio I own has took a significant jump over the last 2 years. So that it was a win-win either way, kind of, but it's harder to get deals in a real growth market. Even the Northwest has been a real top performer over the last 7 or so years, has slumped out, but London's been the worst performer, continuously been the worst performer for a period of time. But then when we look at the trends that's going on from Rightmove, it really does show a picture of what's kind of could be coming. So look, they show the average house price trend is plateauing as well at the top there. You look at this one as well, monthly changes in average asking price, again really down. 5-year averages shows a different story there, but this is an interesting one for me, the stock levels. So one of the big reasons we've had a boom, in my opinion, is supply and demand. It's supply and demand of money, so we have a lot of access to money at a low rate and a lot of access of lending, and we've also had a low supply of properties. Since COVID and it locked down, that supply chain slowed down, it never replenished, but you can see it's slightly starting to edge back up again, which obviously is going in the right direction for us property investors, because the more supply there is, the more opportunity there is. But when it comes to gathering data, make sure you gather that data from multiple sources. Again, Rightmove is just asking prices, it's not sold prices. So you want to go onto other platforms for some sold prices. So Office of National Statistics is a great platform. We'll look at this now. You also can look at Halifax Index, the Nationwide Index, and the government, but a lot of them spit out very contradictory information. So look, this is what the Office of National Statistics have said. The main points are UK house prices increased by 12.4% over the year to April 2022. This is an update from this month. If you look at the top here, the average UK house was 281,000, and the average house price increased over the year in England to 299,000, 11% in Wales, and 212,000 in England, in 212,000 in Wales, and this is a 16% increase, and in Scotland 188, which is a 16% increase, and in Northern Ireland 165, which is a 10% increase. That gives you the average of 181 between those. London continues to be the region with the lowest growth at 7.9%. When you look at compared to Wales at like 16%, and these other areas, it really paints a picture. And again, we'll talk a bit more about this in a minute, but it's definitely to do with the affordability and the price per earnings ratios. But I said to you, it's really important to get your data from multiple platforms. So this is the government, Office of National Statistics is the government website. And if we go across to this other government website, which is directly from the government, run by the government as well, tells you a little bit of a different story, not too dissimilar, but it just shows you the importance of gathering data from multiple platforms. So this platform is saying a non-seasonal adjustment based on average house prices in England increased 0.8% between March and April 2022 compared to 1.2%. As I said, some of these data's come from the same place but slightly contradict each other. So it's really important to look across the multiple platforms. Another, again, Halifax and Nationwide's data is slightly different. So it's worth looking at both. I'm not going to go into both of them here, but I'm going to have a look at what Nationwide said. It's one of the major ones that report this, but I feel if you can get the information from a few of them, you can gather enough data to get an understanding of the sentiment of what the market is. But it says annual house price growth slows in June, but remains in double digits. Modest slowing in annual UK house prices, growing to 10.7% in June from 11.2% in May. Most regions saw a slight slowdown in annual growth in Q2. South West overtook Wales as the strongest performing region, while London remained the weakest. This is a common theme. I've been saying this for a while. I love London. I was born in London, live 10 minutes away from London still now. So I've got nothing against London, but it is going to struggle going forward just because of the affordability ratio with that. And this takes us quite nicely into part two, the cost of living crisis and affordability. So this is what is definitely putting the pressure on there. So Bank of England raised interest rates to 1.25%, the sharpest rise since we come out of the recession. They also, though, on a contradictory move, completely wiped out the stress test. So the stress test is where they stress you 3% above the rate you're lending at. So if you're lending at 3%, they stress test it at 6% to see your affordability. This has put a lot of cushion in the market at the moment for affordability. But as them lower interest rates are creeping up, it's going to really put a pressure on what people can afford, because if the base rate's higher, the base rate was at 0.4 before, 0.25%, so it's now 1% higher, so people's loans are going to be higher, so their affordability is going to be stretched, especially with the cost of living crisis. I'm not going to go too much into this here because I've done a video on this just recently. You can get that here, or you can look in the description if you don't want to continue watching through to the end of this video. Johnson has been out in full force trying to regain some confidence. Obviously, he's thinking about the elections and thinking about votes and coming back in. And the housing market is a great vote winner. That's why the private rented sector has been attacked so much recently. But what he's suggesting at the moment is bringing back the right to buy has been removed, but he's talking about 0% deposits for home buyers, well, first-time home buyers specifically. In this article by Metro, Boris lays out a new policy to claw back support from extending the right to buy. And Boris will set out plans for lower paid workers to be able to use housing benefits to buy their homes on the right to buy. So he's also giving a zero deposit to extend the right to buy, but also he's allowing them, because the right to buy was a council scheme introduced by Margaret Thatcher originally. I think it was a great scheme, but what they needed to do is when they were selling off these social housing, they should have been rebuilding, and they wasn't. They were just using the money for other stuff. It's great for letting people be homeowners, but this is what's made the private renter so in demand, because the government have not been supplying social housing. He's talking about letting housing association people buy their homes, not just council people. So this is a great move for homeowners, but it's not a great move for the stock and supply of properties, and they've just not been keeping up with that supply. And with another attempt, Boris has been talking about multi-generational mortgages. Basically, Boris wants multi-generation mortgages so parents can pass on debt to their children. And this is another attempt directly to really boost and bolster the housing market and the affordability. If your affordability is based on a certain period of time, and the older you get, the harder it is for you to get that past that affordability. If you're 70, they won't re-loan to you, but if you can pass it on, this has allowed people to take longer mortgage, 50-year mortgages and long-term mortgages. Do I think that's a great thing? I'm not too sure. I think what we need to do as a nation is build us more properties, and the government needs to spearhead that by making planning easier and by building themselves. The government build a measly amount. I think it's under 5% of the new properties that come to the market. And the government can do this because when we come out of World War II, when we was in massive debt from World War II, the government was building over 300,000 properties per year, the target we should be building today. And since the 1980s, we've never hit 300,000. I think we've just about been over 200,000, let alone 300,000 a few times. Many years, about a decade, around 100,000. And when you need 300,000 properties, and we've been doing this for about 3 decades now, needing 300,000 and only building between 100 and 200,000 per year, you can see where the restraints have come in. A lot of people blame landlords, but there's only about 6 to 10% of transactions per year get sold done via a landlord and a property investor. So it tells you that's not the major push on price upwards. It's a lack of supply of houses and the lack of new builds coming through, which we really need to up our game. France and Germany are building over 300,000 per year over the last few years throughout COVID and throughout these times. Same size economy, same sort of size populations. So if they can do it, we most certainly can, but government does not prioritise that. And finally, predictions. So in this article from the Times, they're saying, when will house prices fall? The UK property boom might soon be over, as experts predict that the cost of living crisis and raising interest rates could cause a house price correction. So I've said this loads of times. I'm going to give you my predictions. My prediction is, of course, it will correct at one point. I feel we're in for more of a correction rather than a crash next time, because the banks have lent pretty strongly. They're stress tested before. Even though we've moved that now, I still believe they still will be lending quite responsibly, and they've lent responsibly for the last decade. So that's been factored in the base rate rise with most people. Cost of living crisis obviously going to have a pressure on that. I feel we might get correction, but the last crash in 08 was a crash because of subprime mortgages and the mortgage market as a whole, and people borrowing more than they can afford and irresponsible borrowing. But this hasn't happened. So I can see a potential correction, especially where the price per earnings ratio, like the average earning in comparison to the average home, I feel where that's wide, I feel that's more vulnerable for the corrections. But areas where you're in line with that, I feel that's going to be okay. But it's just my view. None of us know when this happened. Time in the market, as I say all the time, if you watch my videos previously, will always beat time in the market. So being in the market is what you need to do. And what you need to do is buy assets that allows you to stay in the market for a long period of time. And in my opinion, without a question of that, check out this video on what I do about the property delta matrix. It's about building an all-weather portfolio that you've got a foundation of single-let properties that can be covered by housing benefits if people lose their jobs, which give you strong yields, which can handle rate rises. That's what it's about going forward. If you want to learn about that, we've got a free workshop coming up, how to buy single-let BRR properties where you can add value to them, put a bit of protection in for asset price fluctuations, also protection for rate rises. I have to do this remotely 250 miles from where I live in the northeast because it doesn't work in and around London where I live. So if you want to learn how to do it remotely, or even if you live in an area where you can do that, you want to learn how to do that in your area, look in the description for our next workshop, or register. If it's beyond the next workshop, just register your interest, and I'll be register your interest for the one that's coming up following that, and we'll teach you how to invest in BRR property remotely, build that foundation of single-let properties, which you build on top of with the higher, riskier stuff. It's great going for HMOs. I've got HMO I'm doing at the moment, but the commercial valuation comes in wrong. I've got a lot of support from my single-lets to ride that out. I'm doing a block of 6 flats at the moment, and if the valuation comes in wrong, we're going to SA some of them, and the market changing with SA and people can't afford to travel, or these big employers slow down employing a little bit and they're not bringing outside employment in, or the developments slow down and the contractors are not in so much. I know this works as a single let still, and I've got the downside protection on the rest of my portfolio of the single lets, but I've got a bit of everything in there. There's another video here that explains that a little bit better, so make sure you watch that. But if you're here to the end, a massive congratulations, a massive thank you. My why is to live on my terms. My mission is to help as many people live in their terms using property mindset, financial education as a vehicle to do that. So please smash that like button if you've not done it already. Please hit the subscribe button and the bell icon so you get notified every time we bring these videos out. And remember, if you don't evolve your ideas, you never live on your own terms. So evolve your ideas, live on your own terms. Please share this out to help out my mission to help people live on their own terms, and have a fantastic day.